please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But moving on to get you some opinion on the markets and all this, the entire situation about IL&FS and how their credit rating agents, the credit rating got downgraded from AAA to junk in just in one step. So regarding all that, we had a chat with Rashesh Shah of Edelweiss, where he said that mutual funds should not outsource the credit risk. He also went on to say that there is a solution to the IL&FS mess in sight if the shareholders get up to 10,000 crore in equity and liquidity. Listen in.
Our mutual fund industry is geared to take interest rate risk, but not geared to take credit risk. If you find out the credit research provided by brokers, the credit research provided that is carried out by mutual fund, it is very, very low. Nobody does credit research in India, and I think this should highlight the fact that we need to not outsource credit research to credit rating agencies, but everybody needs to conduct credit research. IL&FS is larger. The larger problem is a liquidity problem, not so much solvency problem. Yes, they were short of equity because they were geared a lot more than they should have been geared, but that was known to everybody, including the investors. And from what I hear, the investors have been talking about putting money or doing an IPO for the last 1 year. So I think equity need of IL&FS of say 5 to 10,000 crores was evident all along, but that equity shortage has been coupled with a liquidity mismatch, which is also another 8-10,000 crores. So if the investors provide liquidity and some equity, I think the problem can be handled. In the last 3-4 years, I think banks, the best part of the bank's portfolio has been their exposure to NBFCs. In fact, there is almost zero NPAs on banks giving loans to NBFCs across the board. That last 5 years, NBFCs were growing at 25 to 30% a year and banks were growing at 8% a year. Now we are seeing bank credit growth has gone up from 8 to about 13-14. I expect NBFC's credit growth will stabilize at about, say, about between 15 to 18%. I think the NBFC growth will get calibrated after 5 years of 25-30% growth. I think the next few years will be a 18% kind of growth for NBFCs. And what the equity markets have done is actually quickly recalibrated the growth hypothesis around NBFCs, which I think is not incorrect.